Good morning, good afternoon, good evening, depending on where you're watching from. I want to explain this real quick, as plain as I can. We're going to be talking about stock splits, why companies do it, how they do it, what are even stock splits. So the two most popular ones, which are pretty much it, is the normal stock split, which is known as a forward split as well, and then reverse stock split. What is a stock split? Well, the explanation is in the name. It's basically dividing a stock into multiple shares or lesser shares. I am going to explain the first one, which is the stock split. When a company does a stock split, they divide the stock, like the price of a stock, into multiple bits further. So think of it as pizza, right? You have this big pizza that has 8 slices, but the 8 slices will not reach everybody, or people might not bite the 8 slices because it's too big for them. So what the company will decide to do is just divide it into further pieces. So a perfect example of a stock split in this case that I will use will be Seplat. As of this morning, Seplat is currently trading above 8,000 naira, right? Let's assume that Seplat is currently 8,000 naira per share. So one share of Seplat is 8,000 naira. That is expensive for most people. They'll be like, I don't want to buy Seplat. I'd rather buy a stock that is like 2 naira or 15 naira or 10 naira instead of paying 8,000 naira for one share of Seplat. So because of that, Seplat might now decide, I think we should do a stock split to get more people to buy shares of Seplat. So what they will now do is they can do a 5-for-1 split. So what is a 5-for-1 split? They are saying that instead of people paying 8,000 naira per share, we are going to divide that one share of 8,000 naira. We are going to divide it into 5. So they divide one Seplat stock from 8,000 naira into 5 pieces. Now it's 8,000 naira divided by 5. What would that give you? Let's do a quick math there. So 8,000 naira divided by 5 will give you 1,600. So one share of Seplat now is 1,600 because Seplat just did a 5-for-1 split. They divided one share of one Seplat stock into 5. Now you're probably wondering, what's now going to happen to my own? I have one Seplat before that was 8,000 naira, but now they've split it. What will happen? Nothing. Your money is still going to remain 8,000 naira, but now your shares are now 5 because they split it into 5. So that is what a stock split is. That is a 5-for-1 split. They divided one stock into 5. That's it. You now own more shares. You now own 5 shares instead of 1 share, but your money stays the same. So a stock split is very, very inconsequential, for a retail trader on a normal day. Like, it doesn't really affect you. Your money is always going to be there. It's just that the number of shares are going to change. So again, this time around, instead of 8,000 naira for one, you now have 5 because they split it into 5. So you now have 5 shares of Seplat. Because they split it now, Michael, Joseph, everybody, they'll now be like, Seplat is now cheaper. They did a stock split. Let's go and buy. Now it's just easier for the average retail investor to quickly go and buy because there's now a stock split that made it cheaper. Now people can buy like 5 shares, 10 shares, 1 share, 2 share. It's just cheaper now. It's no longer 1 for 8,000 naira. It's now 1 for 1,600. So that's what a stock split is. Why do companies do it? Well, psychologically, it's because they want to make it cheaper, in a sense, for people to buy that particular stock. It also now creates more shares in the market. So how sometimes you'll not be able to sell or buy a stock. Now there are more shares in the market. There are more pieces of it because they did split. So there are more shares for people to buy and sell and all of that. So that is why companies do a stock split. This stock split is also called a forward split. Basically, more shares in the market, in a sense. So that's it. Now, the opposite of that is something we call a reverse stock split. A reverse stock split is basically when a company decides to compress a stock. They have like plenty shares out there, and these shares are maybe very, very cheap. So they decide to now, compress it into one. Let me give you a proper example. Let's bring it home to Nigeria. So you have a stock that you bought at 10 naira. Let's say you own 1,000 shares of it. It's just 10 naira, and you own 1,000 shares of it. And they want to do a 1-4-10 split, which is a reverse split. Right? They want to convert 10 shares into one. This is what it's going to look like. So you own 1,000 shares. It was 10 naira per share. Let's say you have 10,000 naira, because again 10 naira per share, and you own 1,000 shares. If they announce a 1-4-10 reverse split, it means that you now own only 100 shares, because again they compressed 10 shares into one, 10 shares into one, 10 shares into one. Now you own 100 shares, so it now becomes 100 naira per share, but your total money is still going to be 10,000 naira. So you have fewer shares, but now the perception of that stock is that one share is now 100 naira. Your money will stay the same, but one share is now 100 naira. So some people will be like, okay, let me buy. It looks like a valuable company, yada yada yada. A reverse split is something that doesn't happen very often, to be honest. The one that happens a lot is the stock split, but a reverse one, it hardly happens these days, but it's a thing in the market. Now, why do they do a reverse stock split? Because sometimes some of these exchanges have requirements. So for example, if you list your company in NGX, and NGX is saying, Egbo, before you can actually prevent your stock from delisting on our platform, maybe your stock is going down. Maybe before it was 20 naira, it dropped to 10 naira, it dropped to 5 naira, it kept dropping, and NGX is now telling you, see, your stock is like reducing, you need to do a reverse stock split. If you don't do a reverse stock split, it's going to be delisted. The company is going to be delisted. So because of that, you can now decide, and again, this is an example, you cannot decide we are going to do a reverse stock split. So those small, tiny portions, we are going to join it all into a big one, so that the share price will now increase. So with this explanation I've given, I hope I've been able to explain what a stock split is and what a reverse split is. It doesn't really affect your stock in a sense. It doesn't affect the amount of, your amount of money in a sense, basically. But yeah, that's pretty much it. In terms of reasons, there are so many reasons companies do it. You need to keep an eye out for why the company is doing it. If not, there might be a case of more sell-off. Sometimes if a company does a split, maybe the price was already cheap before, like really, really cheap. They now do another split. People start to go like, why are they splitting it for that? Imagine a stock is like 500 naira per share, and then a company decides, you know what, we are going to do a 5-for-1 split. Like, why not just leave it, at 500 naira per share? So if they now do like a 5-for-1 split, it becomes cheaper, and because it becomes cheaper, some investors might not like it. So the stock might start to dip, because some people might start to sell off. But again, you really need to find out why they are doing this split. And in this case, most of the time, the company will tell you why they are doing a stock split or a reverse split.